Planning your own estate might not be at the top of your fun things to do list, but it will help you create a lasting legacy. Then, protecting your identity is serious business. Learn what steps you can take to protect yourself and how to find the best ETFs in Canada. All this and more today on The Wealthy Life. Have you had the important conversations with the right people about your estate? With us today is Cindy Bory, Portfolio Manager at Raymond James Limited, to discuss why that's important. Cindy, welcome to the show.
Thank you, Sybil.
Well, let's start with what is an estate plan? I don't think most people even understand what that means.
An estate plan will give direction for your estate if you're not here, if you pass. So it really lines up what you would like. It helps reduce tax. It gives clarity on the direction of how you would like your estate to action if you pass away.
Now, it's not the most exciting thing to plan for because it generally means you're no longer here. Mm-hmm. But what happens if you don't have a plan?
If you don't have a plan, you often see family problems. You see your wishes won't be heard because you haven't made the will, which the will identifies your wishes and how would you like your estate to be laid out if you're not here.
If I want my assets to go to my husband, to my son, and to a charity, if I don't write that down and I pass away, everything will just go to my husband initially.
Right.
And that's maybe not what I wanted.
That's right. And that's where your estate plan is important, especially actually at all ages of life. Sometimes we find a lot of emotional problems with estate planning. And we see it a lot when people have built their wealth and maybe in their family they don't have that type of background. So they don't have the knowledge or the education to know how to lay out an estate plan properly. And it's partly what you want, where you would like it to go. But when you do proper estate planning, it also includes tax management. It can encourage you to potentially enjoy your wealth earlier because we do cash flow analysis to make sure there's lots of
Now that's an important one.
Right.
So in doing the plan, people might realize they've got way more money than they need.
Right.
And maybe that makes them feel more empowered to enjoy it. Either give some away while they're still alive or
That's right.
go on those extra luxurious vacations if they wanted to, donate to charity. You don't have to wait till you're gone.
No, and that's where also your estate plan should be reviewed regularly. So for example, if you're say 70 and you start to enjoy your monies a little more aggressively than you expected, you may have less at the end of your life, but you may have helped your children and you've totally enjoyed your personal wealth. So working in that world, that's part of the role of the tools that should be offered when you're doing your estate planning.
Yeah, you can't take it with you. And in some cases, you do want to leave a large nest egg behind for family members, friends, charities, whatever your wishes are. But in some cases, you don't.
Well, and if you live to be 96, it might look very different than if you live to be 70.
Now, how many Canadians even have the basic part of an estate plan, which is a will? That's step one.
Yeah, I think less than 50% have a will, or more than, it was about 50%.
About 50%.
Yeah. And the challenge too, if you're a young parent, what made me get my first will is I realized my guardianship of my children would go to the court because I hadn't identified it. So I went and got a will so I could make sure my children, I knew who was keeping them if something happened to me.
Well, that's really important.
Well,
I hear
sure
a lot
is.
of young people and they get married and have kids, but they maybe don't have assets yet. They maybe haven't even bought a home and they don't really have much in the way of investment. So they think, I don't need a will.
Right.
Who's going to look after your children? Do you want the court to decide?
Well, and that's where, get a will. You can do a very basic will at that stage. And as you get older and you have other wealth and assets and other things, it becomes a little more complicated. But also working with the right professionals will help you through that.
You don't have to do it alone.
No, it's a process. And actually the will is the end result of sometimes hours and hours of discussion. Yes. Because how would you like to stop your day today and say, if this was my last day, this is what I want it to look like?
Oh.
It would be, because you're not here. So
No.
I mean, right away you have an emotional problem.
No kidding.
So there's a lot of discussion points. And some people it's very, very emotional.
And having that conversation with family. I mean, you don't need to give away specific details to your kids and grandkids about how much money you have, but should you have a general discussion of where you want your money to go?
Yes, you should. And if you call your family and you have this discussion, who's the executor and why, how you're going to lay it out and why, these problems don't come up after you're gone then. If you have this discussion, we keep file notes, the lawyers keep file notes, and what happens if a family member disagrees, because of the discussion points, the notes, and all these things, we can support the will at a much higher level.
So have the conversations, document it, put a plan in place. Yeah. What would you say the main benefits of having an estate plan done are?
Well, once you realize that you may outlive your monies, and you realize that you're healthy and active, say 70-year-old, your advisor, your planner can show you how much a year you can enjoy without compromising. And sometimes we find, for example, in 10 more years at 80, your will might look slightly different, or your assets, and it's absolutely okay. So these wills need to be checked in on regularly to make sure they're still current, but it gives you freedom and it allows you as the parent to enjoy the wealth that you worked your whole life for and enjoy it with your family and others and charities. And if you do it right, you can have it all.
Cindy, I love that. Do an estate plan so you can enjoy it now.
Yeah.
Thank you so much for being with us today.
You're welcome, Sybil. It's my pleasure.
And don't go away. Learn how to protect your identity from fraudsters after the break. If your personal information gets into the wrong hands, it could be used against you. With us today is Cheryl Prince, a fraud and financial crimes consultant, to discuss how we can protect ourselves from fraudsters. Cheryl, this is an important topic today.
Absolutely.
Welcome to the show. Glad to have you here. Let's jump in. What is identity theft?
So identity theft is something I think we're hearing a lot about in the news with a lot of the scams that seem to be happening. But this is where a fraudster takes over somebody's identity, usually by social engineering. So whether it is a scam where they're able to gather information on the individual, they can then use those details in that data to take over their identity, so to speak, and apply for credit in their name, open up accounts, and the list goes on.
So there might be more than one Sybil Verch floating around out there if I'm not careful?
Absolutely.
That really does scare me. But what can they do with that information, and how does that impact me? Am I on the hook for damages?
So you wouldn't be on the hook for damages, but there are some cases out there in the media where it can be very time consuming for you to go through the hassle of trying to reclaim your identity, so to speak, and essentially fix your overall credit history. Now, what we see happening is fraudsters will take the information. They may leverage it to apply for things like credit cards. We see that quite often. Cell phones, even car loans. And we see a lot of cars going to the port, going to other countries fraudulently. This is a way that some of the fraudsters will leverage your information, pretending they're a Sybil, to go out there and exploit consumers at will.
Wow, so they pretend they're me, they apply for a car loan, they buy the car, and then they ship it somewhere else, and they don't pay it back. And then I guess the car dealer then comes after the real Sybil to say, hey, you owe us money.
Absolutely, and it's happening daily.
So how do they get access to the information in the first place?
See, this is what is so interesting. Right now, a lot of people use social media, and so we have a lot of information about ourselves out there. But in addition to that, I think on a daily basis we hear about data breach. A lot of information sometimes is captured from data breaches or situations where we do see scams and fraudsters are trying to, through social engineering, gather information on you that they can then use for financial gain. And they continue to use the same information again and again, applying for multiple loans.
So data breaches, I assume you mean through companies, organizations, government entities. We've seen different things in the papers. So a hacker may go into a corporate database and get all kinds of confidential information there.
Absolutely. I'm reminded of a case that actually just happened a couple of months ago, and it was led by the FBI, and it was called Project Cookie Monster. And what the FBI was doing in consultation with 18 countries, Canada being one of them, they were able to shut down a dark web marketplace that had in excess of 2 billion credentials out there on consumers.
Wow.
Exactly. I'm not talking just passwords, credentials, and from large organizations that we all access: PayPal, Netflix, online banking passwords. All of this information was on sale. So, this is where we are at risk. It's so important to do everything we can and be vigilant to protect our information.
Okay, well, let's just assume for a moment that all of our information is already out there on the dark web, as you say. What can individuals do to protect themselves after the fact? How would they know if someone's trying to be them?
Absolutely. And this can be the difficult part. So, first, I would say make sure you get access to your credit file. You can reach out to Equifax or TransUnion. You can get a copy of your credit file, look through it, understand it. Have you applied for some of these inquiries or transactions that are showing on your credit file? That's a first step in being alerted to something potentially fraudulent happening on your credit file. There's also things you can do, like signing up for ongoing credit monitoring. So, again, not just focused on pulling the credit file, but if you have the ongoing monitoring, you receive alerts to any changes that happen. Even if there isn't a change, you'll get an alert saying, no news is good news. And so there are certainly ways that consumers can help protect themselves.
Oh, that's really great advice. So if everybody signed up for credit monitoring and was alerted every time somebody was trying to access a loan, they'd be able to shut this down a lot sooner.
Absolutely. Being informed is really, I think, the quickest and safest way to protect your information.
Cheryl, thank you so much for being with us today. It's been a pleasure.
Thank you. I appreciate it.
And up next, learn where to find the best ETFs in Canada when we return. Exchange-traded funds have gained popularity over the years, but with so many to choose from, how do you find the right ones to invest in? With us today is Money Sense writer Michael McCullough to share his views on the best ETFs in Canada. Michael, welcome to The Wealthy Life.
Glad to be here.
So let's start with the basics. ETF, exchange-traded funds, what are they?
Well, if you're familiar with mutual funds, it's a similar kind of idea. It's a pool of money that is put together to invest in, usually it's stocks, but it can also be bonds or other assets. And those are designed to earn a return for the holder. And ETFs, what makes them different from mutual funds is they're actually traded on a stock exchange and they have a ticker symbol like a stock. So that makes them very easy to buy and sell. You don't have to do any paperwork. It's an instantaneous process.
Right, so buying an ETF, you get an instantly diversified portfolio of a bunch of underlying stocks and or bonds.
Correct.
With one order. Mm-hmm. So how about the fees associated with them? How do the fees on an ETF differ from that of a mutual fund?
The fact that there's so many ETFs out there, there's more than 1,300 trading on Canadian exchanges, means that it's a very competitive environment. And for that reason, it has helped keep management fees down. A big part of the market is what's known as index funds. And these are funds that are basically, they put in all the stocks in a stock index like the S&P TSX composite. And that way, you're not paying a manager to pick the stocks. It's just a standard group, and your returns will pretty much mirror what happens in the marketplace.
Right, minus a little bit of a fee.
Right.
What do the fees range from on ETFs?
Well, for the lowest cost ETFs are they're 0.06 of 1% of however much you have invested per year.
Okay.
And so that's a really small number. They can get more expensive. There are actively managed ETFs that can range up to, at the most, the most expensive ETFs out there won't be as much as 1% of your holdings per year.
Right, but as you said earlier, if you pick one, the lower cost one is just mirroring an index. There's no skill involved in that. So you're not paying a money manager to go in and do the research of the underlying holdings,
right,
buying and selling of individual positions to try and maximize return. It's basically just following the index, which isn't such a bad thing to do in some cases.
Not at all. That's what's known as passive investing. And if you actually look at the statistics, in any sort of 10-year period, fewer than 20% of the active fund managers are able to beat the index. So this is not, this is a really smart way for an average investor to ensure that they're doing as well as pretty much everybody else out there.
Now, with over 1,300 to choose from, where do they start?
Well, this is where the Money Sense Best ETFs list comes out. And there are a few other lists of recommended ETFs. We have an expert panel of investment professionals who look at everything out there. Our list tends to favor index funds, tends to favor low fee funds. We also like funds that are larger. That means there aren't any transactional difficulties if you want to buy and sell. There isn't what's known as a big bid and ask spread between prices.
Right, because you mentioned it trades on the exchange, and the way to make a trade happen is you need buyers and sellers.
Correct.
And if there's not enough buyers or sellers, then the price gap can get pretty big.
Right, and that can end up costing you. It can cost you a couple of percentage points in what you're paying for an ETF.
So what are some of the specific criteria you look at to make the top of the list?
Well, ideally, you want good diversification. I mean, that's the principle of buying a fund versus a stock to begin with. Is a single stock, a company can get sued and their price can go down and bad things can happen. But if you own many stocks, and an index fund might have anywhere from 50 to 250 stocks in it, you are going to get the average performance of the marketplace.
So if one stock goes under or has bad performance,
Right.
it's really going to be a
not
little
big
blip.
deal.
How about if you buy an ETF that is sector specific, though? That's higher risk yet again.
Yes.
So if you buy something that's all financial services, for example, and the financial services pulls back or goes up, like it's kind of all your eggs in one basket, isn't
Right.
it?
There's certainly plenty of selection out there, and generally we stay away from them in our best ETFs, but there is opportunity if you, for example, work in an industry and know things that are going on and you feel you have special information where you can earn more than the market average. By all means, there's lots to choose from in terms of particular sectors, particular stock characteristics like low volatility, for example, is a good area to invest in.
And different risk levels. So these ETFs could be conservative fixed income, or they could be aggressive growth in all equities. So where can people go to get more information and see what's on the current top ETF list in Canada?
They can go to moneysense.ca. You'll find the best ETFs in Canada and a whole lot more there.
Michael, thank you for being with us today.
Thank you.
Up next, learn how much is needed and how to save for your kids' education after the break. Welcome back. Thanks for your emails and social media messages. We love hearing from our viewers. Today's question is from Vivica. Dear Sybil, I have 3 kids, ages 8, 10, and 13, and would love for them all to complete a degree after graduation, but I'm worried about how to afford it. What options are available to help pay for post-secondary education? Sincerely, Vivica. Well, Vivica, sending 3 kids off to university is going to be quite costly, but the good news is you don't have to do it all by yourself. There are scholarships available, grants, and awards that can help pay for that. If your kids have a specific talent in sport, in dance, or maybe they're academically strong, they may be eligible to earn scholarships to help pay for part of their tuition. Grants and awards are a little bit different, and they can be found on various post-secondary institution websites. There's lots of awards on there for different types of recipients. You just need to go onto the website, see what awards are available, and apply. Now, it's also less expensive if the kids end up staying at home while they go to school, so you won't have to pay for room and board. That can help. And kids can maybe pay for some of this stuff themselves. Maybe they'll get a student loan and they can repay it back after they've got a good-paying job. Did you know that the average person with a post-secondary education, like a degree, earns more money than those that don't? So getting a student loan may be a really good investment in their own future. Now, if you do have some money to put aside, I encourage you to look at opening up a registered education savings plan. For every dollar you put in there, the government will provide grant money of 20% up to certain limits. And there are a lot of conditions that apply, so work with a financial institution to find out if that's right for you. And finally, it's okay for kids to work. Have the conversation with them now so that they can start putting some of their paper route money or mowing the lawn money or birthday money aside for their future education. And maybe they'll even have a part-time job while they're at school. So the bottom line is, don't let money get in the way of a good education. And that wraps up this edition of The Wealthy Life, helping you make smart financial decisions. Join the Wealthy Life Club and you'll get access to everything you need to live your version of the wealthy life.